How to trade fundamentals and technicals together. Guys, I'm sure you can imagine I get asked this question a lot. How to actually trade macroeconomics fundamentals and tying them in with the technicals and the charts, obviously trading high impact news events. So I thought I'd give you a perfect example of GBP Aussie, something that we broke down and went over in the macro mastery. Now, look, let's jump straight into it. As you can see on my chart, see GP Aussie. We had this big bull move last Thursday. So pound strength versus the Australian dollar. Why? Because on that day, we had the Bank of England cutting rates. Now you're probably asking, wait, Ken, Bank of England cutting rates, the central bank cutting rates, isn't that dovish? Yeah, in a nutshell, it is dovish, but it depends on so many factors as to how dovish really is it. And it wasn't actually that dovish. Why? The reason being is because when you look at the actual vote split, so each central bank they have voting, right, to make a decision on which way they're going to proceed with rates, raising or cutting, whatever the case may be. Obviously, in this case, cutting. Now, when you look here, okay, and this is obviously shown via various sources, Forex Factory, Trade and Economics, so on and so forth. Now, here you can see Bank of England policy members vote 5-4. So 5 members called for that cut, but 4 wanted to leave rates where they were. So that shows they're very much split. That was known as a hawkish cut because it would have been dovish if they were unanimous, or they had the vast majority calling for the cut, but they didn't. It was very split. They're very divided. And here it even says that for the first time, the MPC had 2 rounds of voting to try and reach a majority on a rate decision, which shows they're very split. So that is a hawkish cut. It wasn't dovish. They just about got that cut over the line. And when you look at the commentary as well, with that decision, they're very cautious about future rate cuts because inflation's still sticky. So they cut rates, yes, because the economy somewhat needed it because growth had been slowing down, but it was a hawkish cut. So in that basis, GBP was able to strengthen. Okay, so we had this push to the upside. Now, when you look at GP Aussie, we'd found major support around this psychological 205 area. Okay, when you look at the higher time frames and weekly, I'm not going to break it down because otherwise it's going to be a very long video. We found very big support, higher time frame support at around 205. So I was already monitoring that. And then you can see, obviously, we started to double bottom here, clearly finding clear support, and we had that breakout to the upside on that hawkish cut. Now, what's nice here is as we were bottoming out, we started to form structure, right? High, 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 low, high, 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 low. You get a point. Now, fast forward to this week. Okay, we had the RBA rate decision where they also cut rates by 25 basis points. Okay, they took the base rate down to 3.6%. Now, the key thing with the RBA, okay, as you can see here, they were actually very downbeat in terms of their commentary. The outlook remains uncertain. They're noting that obviously inflation has continued to moderate. They haven't ruled out, is here, look, won't rule out back-to-back rate cuts. So they're committing potentially to more. They're not ruling it out. And they're saying that, forecasts are conditioned on a couple more cuts. So they're talking about more cuts. They're leaving the door wide open, whereas the Bank of England weren't, and they were very much split. So that creates a near-term divergence where the Bank of England cut rates, yes, but it was hawkish tone. The RBA cut rates, yes, but it was a dovish tone. Do you see the point? So what this does is create a divergence. It gives GBP the edge over the Australian dollar, which is why I took long. So obviously, look, I didn't just jump in on the back of either of the data releases. I waited and digested because I knew if we do get a divergence here, it's going to present opportunities. Obviously, I waited for structure to start forming, high, 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 low, high, high. And I was waiting. And for me, as a swing trader, and just trading in general, right? I'm looking, if I'm going long, I want to get in as close to possible as that new higher low. And that's exactly what I waited for. Obviously, you could see we had created a zone here at around the psychological 206, 50, 60 area. Look, resistance. Then we got that breakthrough here on the dovish RBA cut. Then I was waiting for that retest. I was waiting for this reversal candlestick. Okay, this reversal 4-hour candlestick, tap into there, form, and then bam, baby, I'm going long at that new higher low and swinging it to a higher high. I do have some runners, but the vast majority of my position was taken at that psychological 208.50 area. As you can see, decent risk to reward. Stops were placed just below, obviously, that the wick on that 4-hour candle. And then we ran longs. So that is a classic example of how you trade fundamentals and technicals. You see, I'm not just jumping in straight away on the back of news data. I will always have a view, okay? But I allow the dust to settle. I allow the markets to digest. I don't get involved in all that vomiting where we're going whipsaw here, whipsaw there. I don't. Okay. That's where a lot of the retail guys get burnt and people just get burnt. I allow the dust to settle, digest the macroeconomics, see how it forms then with my technical view, remember, as I always say, macro is the map, technicals are the GPS. All right. I hope that helps. Hope you found value in that. Stay lit, stay blessed. Let's get it.